Thank you very much. And now to our panel. From right to left, I will go. Introducing Peter Taylor, Director of Wine Production Australia at Treasury Wine Estates, and oversees its New Zealand production business as well. He's in charge of. He's a career winemaker and spent most of the 90s with the Penfold Reds, I think, and lived a lot through the changes at TWE, all cost-cutting and brand discipline, which has led to a doubling of the share price in the last year. So well done there. Jim Mularadelis. Jim's the self-appointed Chief Enthusiasm Officer and owner of Ostwine, Australia's largest bulk wine brokerage firm, and a top 10 wine exporter by volume, top 15 wine producer by size of crush. To his left, Shane Tremble, who we've already heard from. He's Head of Corporate Development at Endeavour Drinks Group, the newly named, Woolworths own, but think BWS, Dan Murphy's Online, ALH, all that sort of stuff. He's in charge of business growth, alcohol policy, government liaison. I'm sure pretty happy with that decision in Western Australia to knock back the liquor licence for Aldi recently.
Oh, no, we welcome competition.
Okay. To Shane's left, Paula. Paula Edwards, many of you will know Paula, General Manager for Winegrapes Australia, based in McLaren Vale. She's over 2 decades of experience in vineyard management and all sorts of things, grower liaison, etc. Peter Bailey is Manager Wine Sector Intelligence, there's that word again, with Wine Australia, the data guru that manages the team that collects, analyses and supplies industry data and global wine sector intelligence. And Sandy Hathaway. Sandy's worked in the wine industry also for a couple of decades and now consults, another data guru. She managed the SA Winegrape Crush Survey for 12 years and the National Wine Sector Survey, incorporating the annual crush, as well as a survey of production and inventory previously carried out by the ABS, no doubt when they had more money. Peter Hackworth, over to you.
Thanks, Tikki. So the purpose of this session is, we tried this for the first time last year, if you recall, is really to have a look at what happened in the past vintage and try to get some sense of the outlook going forward. So what we're going to do is start with is invite each of our panellists to just give us some points on some of the standout features that they are seeing in the industry at the moment. You do have handouts on their slides in your folder if you want to make notes as we go along. So I'm going to start with Sandy, who has historically coordinated the South Australian Winegrape Crush. That's now been undertaken by Wine Australia, and we are incredibly grateful to Peter's team for making this data available to us at such an early point in time. It's typically not available until kind of late July, so we're really grateful to Wine Australia for that. So Sandy, do you want to start and give us your points?
Thank you, Peter. And yes, thank you to Peter. I had at least 2 nights to look at this data, so I thought that was pretty generous. It is very fresh, hot off the press, the preliminary figures for the South Australian Crush, and I think my slide is up there. So we see that overall the crush was up this year by 15%, but when you look at that more closely, the Riverland was actually slightly down. There was an adjustment since I did that slide. Riverland's virtually line ball, whereas the cool climate regions overall are up 35%, giving us the 15% overall. When we look by variety, in particular, Cabernet and Chardonnay were up. In Padthaway, for example, 70% more Chardonnay than in 2015. Pinot Gris up substantially, off a low base, of course, and we know there's lots of new plantings coming in there. Looking at value, I think someone asked me in the break if I had the poison chalice. I'm not really sure whether this is good news or bad news yet. We'll see what the others say, but certainly we've got a crush slightly up, but prices up as well. We have something like $60 million more going into growers' pockets, I hope, at least in income terms, based on the value of purchased fruit. The Chardonnay average price was up by $60 a tonne. That's a bit of a standout. Other prices in general just up by a little bit, but almost all prices just slightly up. And then looking at the planted area, and these figures come from the phylloxera board, The total planted area actually declined slightly to just under 76,000 hectares, and new plantings in 2015 virtually non-existent, something like a little less than 500 hectares, although there may be a little bit of catching up to do with not everybody having reported all their plantings yet. So that number might come up a bit, but it's a very, very low number. Of that 500 hectares, at least half of that's Shiraz, as you might expect, and another 25% Cabernet.
Okay, thank you. Paula, from your perspective as someone who's heavily involved in purchasing and the marketing of grapes.
Yeah. Okay, so from across the main and cool climate areas, we saw a bit of a change with the demand matrix in terms of volume. C-grade fruit moved far quicker and earlier than A and B. Traditionally, A and B has always sort of moved first, so there's been a real change in the focus, and winemakers have come out and sort of secured volumes of C-grade earlier. I think that's probably a reflection on what's driving in their sales and what price points are moving. That pretty much for the main, very strong in Barossa Valley and McLaren Vale, and then it did filter through to the other regions after that. Pricing returns, even though obviously Sandy's reported that Chardonnay was up, we still see across a large group of grape growers across South Australia, people not being able to actually achieve a profitable return growing whites. Adelaide Hills regions sort of pull in, and I think they've helped bring some of those averages up, but areas like Clare Valley and Barossa Valley, they really can't return very well on white varieties still. Demand volumes for alternative varieties remains low. There's a lot of push in the marketplace that we see, and a lot of interest from winemakers, but it's really only small volumes. So, it could be less than 10 tonnes. So there's no compelling evidence out there to go out and plant acres or hectares of Tempranillo or Sangiovese or Aglianico or anything like that. It's really small amounts. There is interest, it is driving, and I think that may change in the future, but right at the moment it is small volume. So grape sales to speculative buyers. This is very, us for the last 5 years, or as an industry, we have had a lot of speculative buyers come in and sweep up quite a bit of fruit at sort of what they term a value price, and it goes on to the bulk wine market. In 2015, we probably saw a decline in that and a decline in the number of approaches, and I think that's obviously reflected because of the increased pricing in C-grade, and the increased demand in C-grade meant that growers could achieve a better price and sell most of their fruit. So the opportunities weren't there, and that sort of appears to probably continue in the future, I think, from what we're seeing as well. And the last thing is, especially for 2016, because we did have a higher than average crop level across most cool climate areas, demand in the lesser recognised regions, and that's not devaluing them in any way, but obviously Barossa Valley and McLaren Vale are still the first regions to be taken up by the market, but other regions like Langhorne Creek and Currency Creek, and even areas of Clare Valley and Adelaide Hills to some degree, those can be top-up regions, so especially for varieties that aren't champions of those regions, so like Cabernet in the Adelaide Hills is always a top-up, and that's, I think, a trend that will still continue. There seems to be this regional push, and that's where the wineries are looking for some regionality. So,
Okay, thanks, Paula. Peter, from your perspective.
Okay, so I just tried to look at this from inside Treasury, looking outside, to give a different sort of perspective. And I think the way that we see it is that there's a continuous constrained supply of high quality grapes. I mean, we're obviously going pretty well with particularly the Penfolds brand, which really demands a lot of high quality Shiraz and Cabernet, and we're not fulfilling that demand at this stage. we've been pretty active out there buying, as some of you would know, but we certainly can't fill it. It's certainly, from our perspective, some regions and varieties are going to be much more constrained than others, and I think that's going to result in higher pricing locally. Paul has already talked about it. The Barossa Valley is getting certainly more heated up than some of the other areas. We're noticing their prices for equivalent qualities are definitely higher, and I can see that continuing for a while yet. Sandy asked me not to talk about outside of South Australia, but we've certainly noticed that in other areas such as Tasmania, Mornington, Yarra Valley, WA, where really quality and price becomes less important. It becomes a really restricted supply, and therefore you have a base price, and that's what you pay, whatever the quality is. I put through a lot of things together in the next point. I've said the combined effects of the vineyard grubbing, reduced water availability, Australia dollar value, increase in demand. All of these things I think will produce a gradual increase in irrigated pricing. I'm not sure how quick that increase will be. It'll depend on how much they produce. So I think that, I'm sure that Jim will touch on it, but to me that's a commercial area, and in such an area you're really dealing on the world stage. You're not dealing just in Australia. It's a totally different market. To pick up on something again that Paul has said, I think the market's open to alternative varieties, but the main varieties are really going to continue to dominate. It's still about Shiraz, Cabernet, Chardonnay, Sauvignon Blanc, Pinot Gris a little bit more now, but those varieties are by far the major varieties. And the alternative varieties get talked a lot about in the press and get written a lot about, but really they're pretty small fry in the whole scheme of things for us. And I think, just from speaking as a vineyard operator, well, obviously we own 8,000 hectares. I think from our perspective there's going to be a continual drift towards larger, efficiently run vineyards and new technology to reduce that cost per tonne. So, yeah, thanks, Peter.
Okay, thanks very much, Peter. It's going to have lots of points to discuss as we go along. I'd like to invite now Shane from Endeavour to give your perspective.
Thank you, Peter. So I'm obviously looking at the industry from the consumer end of the telescope, and just to sort of frame up where I come from, I'm talking from the perspective of what we call off-premise consumption, so wine that's purchased in bottles for consumption at home, and if you believe the numbers, that's somewhere around 60 to 80, so somewhere between 70 and 80% of the volume sold. The total packaged liquor industry is a $16.8 billion industry. Wine represents around a quarter of that, or $4.4 billion, and a bit less of that in terms of the volume. After a few years of deflation, we've finally seen a slight increase in value in the last year, only 0.5%, but at least it's heading in the right direction. We've seen continued declines in volume, and we don't expect that to change anytime soon. It's down about 0.5% in volume terms, but you consider yourself lucky. You could be in the beer business, where the numbers last year were showing that beer consumption in Australia was at the lowest level in 60 years, and the fall is actually quite precipitous. Some of the good news is the Savalanche, most of which is being fuelled from New Zealand, is finally starting to slow up. So if you look at the growth in that variety over the past 6 years, it's gone from 12, 9, 9, 9, 4 to 0 last year. So once again, it still represents 11% of the volume being sold in the Australian market, but at least it's starting to slow, which from the point of view of domestic producers is a really good thing. The highest growth is in the $16 to $20 retail price points, which is great because that's fueling that value increase, and it's driving some of the demand that Peter was talking about with regard to premium varieties. And domestic production is capturing all of that growth in the red area, which again is great value. Shiraz is flying, particularly if you're in the business of growing premium Shiraz. You should be doing reasonably well. It's gone from a 5% share of volume in 2010 up to pushing 9% last year. Digital channels are providing some really great new opportunities. I think I said to you last time I spoke to you that we've gone from nothing to 13% of our wine sales in the past 4 or 5 years. That's now in excess of 15% of our wine sales now start with an online order, and that provides opportunities not just for us bricks and mortar retailers, but for everybody in the industry to exploit a channel that is really getting some resonance with consumers. The Aussie dollar's heading in the right direction. I won't cover that. Ross already did that in great detail. Some of the challenges we still face is, as I said, volume growth is flat and is showing no sign of recovering. We're having a lot of difficulty in generating actual increases. Australia is already at the top end of English-speaking nations in terms of per capita wine consumption, and most of the opportunities in that area in terms of increase in per capita consumption seem to be in export markets. Newer growth varieties, as I said to you last time we spoke, are still to a certain extent being fueled by imports. So the big success story out of our business in the summer, and I'm not necessarily talking varieties, but Prosecco and Rosé. In the case of Prosecco, only 38% of the volume being sold in our stores is being filled by Australian grown fruit. The remaining 60% is imported. But local producers can do it because the biggest single SKU in there is Brown Brothers. So, if you've got the fruit, you can definitely get it out to the market. In terms of rosé, obviously not a variety, but the style, significant growth, but once again, only 78% of that being fueled by Australian product. The remaining 20+% is in imports. So there's still some opportunity to take share from your international competitors. I use the term SKU-mageddon, 12,300 wine SKUs, and that's not necessarily on the shelves of a store. I got in trouble for this last time. I think SKU stands for stock keeping unit. It's a retail term, meaning one individual line. So that 12,300 lines to choose from for our customers compares to about 2,500 for beer. So if you're a seasoned wine drinker, I guess it's less of a challenge, but for new consumers into the market, it is a hugely confusing category and really difficult to make decisions, and something I think as an industry we need to do more to address. Cask entry point bottles both in serious decline. That's good news if you happen to be producing high-end Shiraz and the Barossa, I guess. But that category over the years has soaked up an awful lot of fruit. If regardless of what you think about the tax regime, and I emphasise that we're completely neutral on that front. I'm not going to get into that discussion. But if for example, some of the calls for a volumetric tax were heeded, I think you'd pretty well see the end of the soft pack market overnight. And the final thing I'd like to address is what I referred to on the slide as the neo-temperance movement continuing to flourish. And I'll keep talking about this. It's an issue that the wine industry tends to think, well, it's not really our problem. It's got to do with pub lockouts and RTDs and various things. Some of the things that have happened in Sydney over the past 12 months is you can no longer buy a bottle of wine in Sydney anywhere past 10 o'clock, or actually anywhere in New South Wales past 10 p.m. at night. We're getting wine bars, getting visits from the police because their signs are visible from the streets. Some venues are being forced to serve wine in plastic cups. And we recently spent 5 months defending a discount wine offer that was printed on the bottom of a registered docket, thanks to the New South Wales regulator. So there's this increasing push to regard all forms of alcohol, table wine included, as nothing but a psychoactive drug, and it's being placed in the same basket as tobacco, and that's creating considerable threats to the future operation of the industry, because if your route to market is being squeezed and closed, then it's not a great thing for you in general. I had a lot of data to cover here and not much time. Thanks for the indulgence, Peter. I'll be here through lunchtime. I've got happy to share my speaking notes with you if you need them. Just get me a card, or if you've got any other questions that aren't covered, I'm happy to answer for you.
Great, thank you. Jim, from the perspective of someone who's out there in the bulk market in particular.
Thanks very much, Peter. Four points initially, and three of those points are about the world market. Peter touched on the commercial end of the business, which is where our business is focused on. The first point is, and it's well documented, this information is publicly available, there's been a major reduction in vineyard area over the past half a dozen or so years, back to where we were to 2001. Now that's good news for some, but that represents a terrible loss on investment for a lot of others who have decided for various reasons to exit the industry. So we're currently at about 130,000 hectares, give or take. which is very, very similar to the 131,000 hectares that was recorded way back 15 years ago at the beginning of the century. So production potential is down, not necessarily production. The Australian dollar is down. We've talked about that, not only against the US dollar, but also against the UK pound, the euro, the yuan and the Canadian dollar. Those currencies represent well in excess of 3/4 of our export destination for Australian wine. There's an improved trading environment. Not only is there a China-Australia free trade agreement, there's one with South Korea, there's one with Japan. There's also the Trans-Pacific Partnership Agreement negotiations have recently been concluded, together with the elimination of agricultural tariffs through the World Trade Organization. Third point, exports to China are sailing along quite magnificently. Sustainable, probably not, at 60% growth rate, but nevertheless very nice to have for the time being. And that's having a significant impact on the marketplace, not only at the commercial end, but at the upper end, at the luxury end. What does this mean? Improvement in, I've written here demand, but it's really the supply-demand balance for the commercial end varieties. Shiraz, Cabernet Sauvignon, to a lesser extent Merlot, Chardonnay. Australia has the largest Chardonnay vineyard in the world. We're well placed with that variety. Despite the large crop increase that Sandy alluded to earlier in the cool climate areas, Barossa and McLaren Vale, we're still experiencing good demand for Shiraz and Cabernet in particular from those areas. In particular, in the Barossa Valley, we're seeing the larger crop allowing producers to avail themselves the opportunity to top up their inventories. Unfortunately, that doesn't roll out to the other areas. We're seeing a little bit of a McLaren Vale, but all the other, almost without exception, all the other cool climate areas, roughly C grade in the Treasury grading system. There's an abundance of fruit in the marketplace because Mother Nature delivered big time this year with an increase in crop of 20 to 30% depending on the region compared to last year. That's about it.
Thanks, Jim. And finally, Peter, the perspective from Wine Australia in terms of the export market.
Yeah, thanks, Pete. So I'll talk about the export trends, particularly for those 7 key varieties. So they account for about 80% of the volume of total Australian wine exports in the last 12 months. But if you look at Shiraz and Chardonnay, actually account for half of everything that we export. There was volume growth for all but Chardonnay and Sauvignon Blanc. So Chardonnay exports declined by 7% and Sauvignon Blanc by 9%. And the strongest growing of those varieties was Pinot Gris, up 21% in the last 12 months. For bottled exports, there was growth in average value per litre for all of those 7 varieties. And for those 7 combined, the growth in bottled exports was much stronger in premium exports. So if you look at above $5 per litre, or the equivalent of $45 per case FOB, exports grew 17%, and below that level, exports grew by 3%. And comparing straight varietals versus blends, generally the growth in straight varietals was stronger. For example, straight Shiraz exports grew 13%, while Shiraz blends grew by 4%. And it's a similar story for Cabernet. Straight Cabernet grew by 14% and Cabernet blends by 3%. And just looking at overall exports, we do export to 119 countries. In the last 12 months, we experienced growth in 79 of those markets. And the top 5 markets all recorded growth, so that being the US, China, UK, Canada and Hong Kong, they all recorded value growth. And those 5 markets represent about 3/4 of what we export. But clearly China is the growth centre for exports, up between 50 and 60% over the last 18 months. And a lot of that growth is coming up at the higher end, above $10 per litre or $90 per case. In the last 12 months, that grew by 90% into China. And if you combine China and Hong Kong, they become our biggest market ahead of the US and the UK. But there are other markets growing as well: Singapore, Malaysia, Japan, Taiwan, Netherlands, Sweden, Finland. There's a raft of other markets that are also growing.
Okay, thanks. I guess the first question I'd like to just comment on is obviously exports are going really well, but I think a common question would be everyone was hanging out for the Australian dollar to drop significantly from that peak of $1.10 a few years ago, and it's come back and is bouncing around at that figure that was closer to what we saw back in the early 2000s. I'd be interested to get some comments on why we're, apart from a couple of regions, why we're not yet seeing that increase in exports, both in value and volume, coming through in terms of grape prices. Jim, would you like to comment first?
I'll start off with something mildly controversial. I don't think enough people are earning enough air miles to promote their product in those markets than otherwise we could be. The fundamentals are now in place with the Australian dollar, the free trade agreements, the sunrise markets of Southeast Asia. They'll still grow, albeit at lower levels, but it really takes air miles and backsides on airlines to make the connection, establish the relationships, and get outside one's comfort zone, because that's, in my experience, and I've been doing this for nearly 20 years, that's the only way that you're going to have a successful business, is to sustain it, is to promote it sustainably and persistently.
I suppose we're already seeing the growth, but we're probably not yet seeing it flow through. I understand what you're saying in terms of more needs to be done, but any thoughts as to why it's not yet flowing through significantly, apart from those people who are growing A and B grade fruit in particular?
Well, the Australian dollar hasn't been that low for that long, and it's been persistently high for a long, long time, so that could be part of the story. The other part of the story at the entry level or the international business is dominated by the inland irrigated regions, and perhaps some of the C-grade or premium regions again haven't been as active in their promotion activities as they otherwise could be.
Yeah. Paula, did you want to make a comment?
Yeah, I just wanted to add that, and I'll probably sound a bit controversial as well, but the marketers that go out there will always sell easy, and at the moment the easy sell is Barossa, so everybody wants Barossa. So that's where it's pushed, and they want that regionality, so they don't come knocking at your door for a Langhorne Creek wine or a even a Clare Valley Chardonnay is very limited, or Currency Creek Shiraz. People don't come knocking on your door for those varietals. They always come knocking on your door for Barossa Shiraz or McLaren Vale Shiraz, so they'll take the easy option and sell that first. And so that's where they put that's where they put most of their energy in. So probably 80% of their energy goes into that. But it's, there's a lot more out there that we produce, but it's not getting marketed properly.
Okay. Sandy, you said that the total crush is up by about 15%. So I think is that around 820,000 tonnes for South Australia?
We found 10,000 tonnes that should have been in Murray Valley, so it's 810,000 is approximately the crush.
Okay, well that's still
about 90,000 more.
That's still the highest since 2008, and that's 6 years in a row that we've seen the crop continue to increase in South Australia, and yet only 1,000 hectares has actually come out of South Australia. Very little, overall removal. Is this a good news story or a bad news story? This increase in the crop, Peter? Have you got any, Peter Taylor?
Well, it depends on.
Can we sell it and at a profit?
It depends on where the increases are, and
well, perhaps we'll ask Sandy to just quickly tell us that, and then I'll come back to you, Peter. Sandy?
Okay. Barossa, 20%, Clare, 30%, Coonawarra, 28%, Adelaide Hills, 20% increases. McLaren Vale 36% from a low base. Interestingly, Langhorne Creek up to 60,000 tonnes this year, which is a 54% increase. Those are the major ones. Padthaway and Rattenbully also significantly up, which, are those secondary regions that Paula and Jim have referred to, and they're really big increases in crop, especially in Cabernet and Chardonnay.
Okay, Peter, what are your thoughts? Can we sell this?
Well, I think the grape prices will go up when it's a very simple supply and demand. I mean, when the demand is high enough that you can't get the grapes, the grape prices will go up. And at the moment, I mean, you were talking about export, and certainly in the case of our company, 60% of our sales are export. But it's very difficult to go back into those countries such as America and Europe and just expect to walk back in there and just pick up all the sales you had in the past. It requires a lot of work. Certainly we're growing a lot in Asia, but we intend to grow more particularly in the US, which is still an incredibly large market. But getting back there is really, really difficult. And there's always quite a long lag phase before it gets back to the growers. It always works that way. It has done in the past.
Shane, from a retailer's perspective, there's a big opportunity for you if we're suddenly producing more or significantly more fruit, or is that going to be a problem given that we're seeing that, as you mentioned, that decline in certainly bottle value below $8 and cask?
Oh, it's the same answer as Peter. I think so long as it is fueling that part of the market that is growing, it's not going to be an issue. If we're all of a sudden putting the foot on the pedal with irrigated Chardonnay, we've got problems. But as I said, all of the growth is in premium, high price point brands, and so long as that's where the growth's coming from, and based on what Sandy just said, that would appear to be the case. Then that's probably a good news story.
Okay, Jim, what's any idea on the current stocks, or Peter may be able to address that? From your perspective, impact on stocks. What are the stocks like now, and what's this bigger crush going to do?
What we're seeing almost universally is quite substantial stocks of all the premium areas, the non-Riverland areas, including Barossa and McLaren Vale. The difference between Barossa and McLaren Vale is that there is opportunity that people are taking to top up their stock. So we're seeing trade between wineries. In those other premium areas, Coonawarra, Padthaway, Adelaide Hills, Clare, the increase in crop size that has been quoted this morning, 20% for Barossa, 36 for McLaren Vale, 54 for Langhorne Creek. These are quite overwhelming numbers, and there will be some short-term adjustment required, and we will probably see a softening of prices from those regions in 2017 if we're not successful in marketing those wines between now and December. And if stocks are high in December, which I expect they would be for those regions, with the exclusion of perhaps Barossa and perhaps McLaren Vale, then we might see some short-term discounting out in the marketplace.
Okay, Paula, have you got any comments as someone who's out?
Yeah, I think pricing will also be impacted on what people did with their excess fruit this year, and if they chose to sell it cheaply and offload it to people that have speculated that on the bulk wine market, that will help drive pricing down.
Okay. Shane, I was really interested in your comment about the Savalanche declining and zero growth. Is that because people are looking for something else, or is New Zealand selling it into higher yielding markets?
I couldn't really comment on the New Zealand end. I think, as I said, the growth that's been, almost double digit for the last 5 or 6 years had to slow at some point. Hopefully, it represents a little more, diversity in the consumer's palate, if you like. I point out that the fact that the growth is slowing doesn't you know, it's still a very significant part of the white wine market, and can't be ignored. And I get the message from everybody that everyone talks about alternative varieties, but there's, you know, not a lot of action happening. There is at retail level, believe me, and sometimes it takes a little while for that to translate into real volume, but we're starting to see a lot of activity and I again talked about it last time in terms of those alternative varieties, your Tempraneos, your Sangivaises, your Barberos, still continuing to grow quite significantly off very small volumes, but still continuing to grow, and still largely being fueled by imports from places like Spain and Italy in particular. Even PG, and that's one that everyone talked about as, you know, strong domestic growth. Only 76%. I'll get my glasses on. Yeah, 76% of what we're selling is domestic. New Zealand has a very big slice of PG still. New Zealand has a huge slice of Pinot Noir. Almost a third of the Pinot Noir coming into Australia is coming from New Zealand. You know, again, lots and lots of. When you look at what's happening at the consumer end of the market, I'll make the point again that we've somehow got to devise a means to, you know, communicate those trends better to the primary producers in the industry so that you can position yourselves to take advantage of the growth that's going to occur in those varieties in the future.
Okay, thank you. And we should really, before I move on to the varieties, China. Professor Garneau said that China, he has great confidence in its long-term future, but he expects to see bumps along the way. Jim, from your perspective, China still?
I think there's two markets in China, and there's the very, very entry-level market. What we're seeing, perhaps in the last 12 months, is, I guess, a gradual maturing of the demands and requirements of that market. 5 or so years ago, we all heard stories about red wine being mixed with Sprite or cola. We're not hearing any of that anymore. I think the cultural exchange and the cultural understanding today is much better than it was 5 or 7 years ago. Now, these are all long-term trends, and I think these are positive outcomes for the outlook into China, particularly their growing middle class. But I'd like to hand over to Peter, who probably has greater insight into the market than I do.
Yeah, and I agree with a lot of what you said too, and I think Ross was talking a little bit about like it was a few years ago, and I think they've changed quite rapidly in the way that they're looking at wine. And I think that we definitely saw a downward bump when the government brought in those really strong anti-corruption measures and really clamped down on gift giving and things like that, and we saw quite a slump, but it's come back out of that quite strongly. And what we're seeing is a growing, I guess, middle class, a lot of quite well-educated younger people who are actually interested in wine, and that's, I think, the future market. That's where the market is. And when you say you know, a small percentage in somewhere like China, it's an enormous number of people. And I think as you distribute into out into the more regional cities, and they're big cities in the regional areas are still 10, 20 million people. You know, every time you hit one of them, you're hitting a market almost as big as Australia. So you're just getting that constant groundswell at the moment. So I think it's a very strong market, and it is. We're certainly finding it's a very strong market for our top end wines.
And what about the US, though? We seem to be hearing mixed messages about the US. Peter, Peter Bailey, do you want to talk a little bit about the US?
Yeah, I mean, value's up for Australia to the US. So in the last 12 months, we're actually seeing the value grow by 4%, even though volume's down slightly. And the really strong growth, again, is coming up at the top end, above $10 per litre, where we saw growth of 20% in the last 12 months. So it's been a long time since we've got those sort of growth rates at that end of the market. And it is the world's largest premium market, and it's growing. So the opportunity there, we've been there before. We have lost ground, but we're starting to recover some of that ground that we've lost over the last decade or so.
And in terms of, the bulk of the grapes that we grow are in that C grade and below. The growth there is not anywhere near as high, is it?
No, I mean, in that middle ground, there's very little growth, but there is some growth sort of in that sort of $2.50 to $5 per litre mark, which is where probably 80% of what we send over there is still growing.
Okay. I'd like to switch now and have a look at Shiraz, because it really is the story of the moment, and it's probably lucky for us in some ways that it is, because it's, Shiraz represents a third of all the vines that are planted in South Australia, and it brings in 40% of the total farm gate value, and it was up 30%, Sandy said, in 2016. And Paula, you made the comment that the demand matrix is shifting to C grade. Is that because A and B is too expensive, and where are they sourcing it?
Well, the price point for A and B hasn't moved in quite a number of years. There's been a bit of a shift in Cabernet with some companies where they're looking for, super premium Cabernet, and so the price is reflecting that demand. But really, it's a lot of winemakers can't make it work when they have B. They'll come to the market and they just can't make it work. If they've got a $20 bottle and they have to pay $2,400 a tonne, it doesn't work. So then they'll come back down to a C grade type of price, and then try and actually, then they'll make it and blend how they need to. So, and that's I think sort of driven a lot of it, and because of that growth is in that, I guess, $15 to $20 a bottle range. That's the sweet spot for C grade. Okay.
Shane, you were saying at a retail end, Shiraz is flying even in casks. Do you have any sense of why that's happening? Why Shiraz is so strongly in demand? I mean, is this because of pepperjack or?
I'm not the guy you should ask if you want to be looking at future trends. I'm notoriously bad at that. No, I think it's partly a style thing. I think it's there's just what we're seeing in typically is as you get new drinkers entering the wine market, the styles that are being made now are softer, more approachable than potentially they were. The tannins are a bit lower, the alcohols are a bit lower. So I think that the wines are getting a little more quaffable, and I think that's got a lot to do with it. I think that traditionally the variety has been a strength in Australia, particularly in this part of the world. And I think that a lot of the marketing expertise of the big companies, people like Treasury, and you mentioned Pepperjack and the Penfolds brands and so on, has been concentrated behind the variety, and I think that that's definitely a part of the story.
Okay. Peter Taylor, you guys know a fair bit about Shiraz. Pepperjack, I saw the other day, is up 27%. It's now the biggest selling Shiraz in Australia. But even 389 is now number 6 in terms of wines, in red Shiraz-based wines. What do you get any sense coming back from consumers? Is it because you've just been very good at marketing, or?
I'd like to say it's because the wines are really good. I think it is. Obviously, this marketing is really important, but I think the wines are really good. One of the things that we do incredibly well in South Australia is grow Shiraz very consistently from year to year. Sure, you get fluctuations, but in general, Shiraz is a great workhorse. It's good to grow. It grows good crops. It grows good quality. We can manipulate it really well. I think it's a great red variety, and we're really lucky that we've got it planted in South Australia in the quantities we have, and it's adapted so well to our region. So, both of those wines that you talked about, Pepperjack is 100% Barossa, and probably we're our own worst enemy, because we're probably driving some of the price in that region, because it is a regional wine. And we're also very fortunate in brands like Penfolds that in most cases they're multi-regional, so we can actually go into the whole of South Australia and sort of cherry pick from year to year. So I think, yeah.
Yeah, okay. Sandy, have you got any pricing information on Shiraz? You know, I mean, we've seen, it's such an important variety. Did prices move positively across the board for Shiraz last year?
Yes, pick out the main regions. Barossa was up by another $100 a tonne to 2,240. These are preliminary numbers and they will be published at the end of June. This is how they're looking. And up by 158 in Clare. In the Riverland, up $22 to 336. So only in Langhorne Creek and McLaren Vale did they fall slightly, but the tonnages were up by 40-odd%, which may explain that. So prices were definitely up, but I think they're so high that the jumps are now smaller, aren't they?
Right.
There just isn't that room to move.
So it's reasonable to say that the outlook for Shiraz is actually reasonably positive across the board. At the retail end, we're seeing a demand for it, and at the wholesale end as well, at the bulk end. Is that your perspective too, Jim?
Well, for C-grade Shiraz, possibly not, but for certainly A and B and Barossa, to a lesser extent McLaren Vale. At the entry level, we're seeing very tight stocks of Riverland Shiraz. There's a differentiation.
Sorry, when you say tight stocks, what does it?
As in very little inventory that's available to trade. That is surplus inventory typically. We are seeing development in the market probably in the last 6 to 12 months of South Australian Shiraz having greater demand in the marketplace. China driven compared to general Southeast Australian Shiraz. Whether that translates to higher returns per litre or per tonne, is yet to be seen.
Okay. Looking at Cabernet, Sandy, have you got any figures on pricing data out for Cabernet?
Yes, and again, I've only got the top 10 regions here, and they're all up except for Langhorne Creek. Again, very, very big tonnage increases in Langhorne Creek, but the average price for McLaren Vale was up by $146 to $1,500. Eden Valley up to 2,358. So we now have in Cabernet, Eden Valley the highest, Barossa second, Adelaide Hills third, and Coonawarra fourth, but all of those up.
Okay, and what's Peter, starting with you, Peter Bailey, the picture overseas for Cabernet?
Yeah, I mean, just looking at straight Cabernet, value grew 20% in the last 12 months. The top 5 markets, China is the #1 market for Cabernet and grew 61%. US is our second biggest market and exports of Cabernet to there grew 19%. If looking across at different price points, all price points are growing, but again, the strongest growth is coming up above $10 per litre, and that grew 22%, and it accounts for almost 40% of the Cabernet that we export. And if you look at the biggest growth category overall by country and by price point, China above $10 per litre, up 96% in the last 12 months.
Okay, and Paula, in terms of Cabernet, what are you seeing?
Yeah, we're seeing still positive interest in it in the marketplace. So very, very strong interest for A-grade Cabernet for particular markets, mainly Treasury, and but yes, strong in C as well. Fine B is probably, from our perspective in the main and what we deal with, is probably the last to sell. So it's A and C.
Okay. Shane, Paula just said it's the last to sell. Consumers obviously are loving Shiraz. Is Cabernet is it too difficult a wine to approach for a lot of consumers? Is it
still in growth? So the last 2 years we've seen in our business, it represents only 4.1% of just over 4% of volume, but 3% growth in in calendar year 14 and almost another 3% in calendar year 16. That's coming off the back of some declines in the previous couple of years, but it seems to be making a recovery. And again, it's at the top end. When you look at where it's coming from, the average price per litre at retail has gone from 13 and a half in 2010 up to 15 and a half now.
Okay. Peter Taylor, your thoughts on Cabernet? Obviously, you're doing very well again at the top end, but what about at the commercial end?
Yeah, the commercial end, I guess Shiraz is probably an easier sell, and I think it is right. I mean, Shiraz generally can be quite a bit softer than Cabernet, but if you're looking at markets like China, for example, and even to a certain extent the US, they would normally rate Cabernet higher than Shiraz because of either in the US because of their domestic market and in China because their history has really been around France, it's been around Bordeaux and those styles, so they still think of Cabernet as being a much better variety from a quality perspective.
Okay. Jim, you're nodding your head.
Well, I see Cabernet having, in the short term, and I'll talk about entry level, benefiting also from, I guess, the China effect, also benefiting from the Southeast Australia versus South Australia appellation differentiation, which we're starting to see. In the very short term, there could be some upside at the entry level because of a pretty poor crop in Chile in 2016. Styles are quite different. Chilean Cabernet is distinctly different to Australian Cabernet. Whether it's better or worse is inconsequential. They are quite different, but you get to label them the same. So for a lot of international brand owners, particularly people in America who can label varietals and put up to 25% of a foreign wine into their own brands and still claim a local appellation, that could be positive for us in the short term.
Okay. Moving on to Chardonnay, the biggest white that we have planted in South Australia. In 2015, the analysis that we undertook showed that only the Riverland was able to achieve a cash return growing Chardonnay, that every other region was, at a regional level, losing significant amounts of money. Sandy, what was the picture in terms of pricing for Chardonnay?
Riverland up again. That's actually a standout in terms of Riverland pricing. Riverland price for Chardonnay up by nearly $60 a tonne, and the crush was up by 2%. So that's against a general slight drop in a crop. And to keep it in perspective, that 120,000 tonnes of the 160,000 tonnes of Chardonnay grown in South Australia are grown in the Riverland. So everybody else is 40,000. So Riverland is the big picture with Chardonnay. Other regions, the prices were all up except Coonawarra and Padthaway and Rattenbully, but they had very, very big increases in crop. Eden Valley, something's going on in Eden Valley, $160 increase in the price of Chardonnay. Other than that, price increase is around $20 to $50 a tonne.
But generally, everyone saw some level of increase, but it's still probably, for most regions, still probably significantly below achieving a return. Peter Bailey, how's it going in the export market?
Not great. Overall, in terms of total volumes, down 7%. So it's down in the short term and the long term. If you look over the last 5 years, in volume terms, it's been declining at about 9% per annum over that 5-year period. I guess the bright spot is the average value has grown in the last 12 months, so it increased by 6%, up to about $3.73 per litre, and that's for straight bottled Chardonnay. In terms of markets, the US is the biggest export destination for bottled Chardonnay. It's got about a 40% share, but exports were down in value terms by about 6%. The UK is number 2, but Chardonnay exports actually increased in the last 12 months, up by 2%, and China was also up off a small base, but exports grew by 13% in the last 12 months. And if looking at price points, it's pretty sluggish at the top end. the strongest growth really came below $2.50 per litre, which grew 38% in the last 12 months.
Okay. Shane, at a retail end, perhaps Sauvignon Blanc is maybe starting to reduce, but is Chardonnay going to replace it?
Well, in the past, sort of the performance of Chardonnay seems to be inversely tied to the performance of Sauvignon Blanc. So back in 2011, when we had the strongest increase in Savvy, Chardonnay had its biggest decline. You know, we saw Savvy sales go up 12% and Chardonnay sales take a 6% hit straight away. They're still in decline in our business anyway. I can't speak for the market in general, but I think we're a pretty good cross-section. But it's now slowed to a 2% decline, which I guess is good news. And once again, the higher price points, it's kind of ironic because my personal view is that we're making better wines now than we ever have in, pretty much as long as I've been in the industry. But they're not demonstrating the same kind of growth as red varieties. So even at average retail, I think I said we're at 15.5 for red. Average bottle of Chardonnay is now $12.60. It's grown only probably by $1 in the space of 5 or 6 years.
Okay. Not a good news story. Peter Taylor, from your perspective, I think you only produce more at the higher end of Chardonnay? Or?
Oh, it's not a big market. I mean, it's really quite a small market at the top end. I mean, I think we produce some fabulous top-end Chardonnays in Australia, but they don't sell a lot. I mean, a lot of our Chardonnay goes into sparkling, to be honest, from the irrigated areas. And obviously commercial wines like Lindemans, which America is probably the bigger market for Chardonnay. I mean, Chardonnay is not a dirty word in America, but it does tend to be a little bit in Australia and to a certain extent in Europe to a certain extent. So.
Yeah, okay. Jim, I think last year you saw Chardonnay heading back to balance and you described as, a little bit warm.
I'd probably stick with that. I've written down here hot and cold. Currently probably fairly warm, but Chardonnay as a white variety doesn't have what Shiraz and Cabernet have, and that's a graduated increase in price points at the retail level where consumers can increase their appreciation of the variety. I think we do Chardonnay exceptionally well, but when I sit down and I write, where are the famous Chardonnay regions in South Australia? So I wrote Riverland. You could argue whether it's famous or not, but we can certainly produce some terrific wines there. Limestone Coast, Pathway, Coonawarra, Adelaide Hills perhaps. It really is the minority. It really is a niche product, apart from Riverland Chardonnay. The only other thing I would say about Riverland Chardonnay is query the short crop impact in South Africa. We may see some short-term benefits. South Africa is a big producer of white varieties, and we may see some short-term benefits in the international trade as people try and meet a price point in international markets. And in a lot of the markets that we sell to, unfortunately, it's a fact of life, New World is just one section. So New World in a lot of consumers' minds is one region, right up there against France, Burgundy, Bordeaux, Loire. New World is one region. So that's the market reality. Is it possible for me to ask a question of Shane about Chardonnay? We talked about the inverse growth between Sauvignon Blanc and Chardonnay. Last year, New Zealand had a short Sauvignon Blanc crop. This year, it's longer. What impact do you see, if any, on the retail sales of Chardonnay in Australia because of that dynamic?
Well, it's a good question. I think one of the things, when New Zealand has a big Savvy crop prior to this year, when they've had a couple of big ones, what we've seen is a significant drop in the retail price of Marlborough Sauvignon Blanc, so you're starting to see $7, $8 price points, where previously, you could only hit kind of 10. And I think that has potential to impact quite deeply on sales of domestic commercial Chardonnay. I think when New Zealand price points go up, I think your buyer of commercial wine, and this is anecdotal and based on experience, probably a little is buying to a price point more than necessarily a variety. So they'll have a portfolio of wines that they'll consider. And if they've got, you know, $10 in their hand to spend, well, that's what they'll spend, and they'll look around the shelves and find what's on special. And if it happens to be a Marlborough Sauvignon Blanc, which they can drink, they'll buy that. If it happens to be a Lindemann Chardonnay, they'll buy that.
Okay. Peter.
I can add a little bit to that. I think you're right, the crop went up in New Zealand, but the price also went up because a lot of contracts were locked in early because people thought there wasn't going to be as much fruit. And they were up to about $1,800 to $2,000 a tonne in a lot of cases. So even though there's going to be a lot of grapes there, there'll be a lot of people with quite high cost per litres. And it's going to be very hard for them to make money on the Australian market, I think.
Okay. I'm conscious that we're running out of time. I obviously didn't make enough time in this session to cover all the varieties, but I just wanted to quickly touch on Merlot, in part because I remember our outgoing chair last year saying Merlot doesn't belong in Australian vineyards, pull it out. How's it go? But I don't think it's going terribly well overseas either, is it, Peter?
No, to the contrary. Volume's up. This is just straight Merlot, bottled Merlot. Grew 9% in the last 12 months. Value is up 18%. And the average value grew 9% to $3.79 per litre. So it's not all doom and gloom for Merlot. Clearly the biggest market is the US. It's got about a 40% share of our total exports, and exports of Merlot there grew 17% in the last 12 months. And all price points are growing, with growth rates around 20% in the last 12 months. So it's not all bad.
Paula, is it all bad?
From a grape grower's perspective, it's not good because the price is awful, really. And a lot of it is, every year we're just seeing more and more of it get pulled out. So that's probably going to help the supply-demand equation later because there won't be much to supply.
Yeah, okay. What about from a retail perspective, Shane? Is there people interested in Merlot?
Still in decline. So, last couple of years down 3.6, down 7, down 1.7 last year, and quite a small percentage of overall volume. So it only represents now 2.3% share of bottled wine volume. So not much happening from a retail point of view.
And do you get any feedback from consumers? Is there, we've tended to have quite old clones that have been replaced. Is there something wrong with how we're making Merlot?
Yeah, I think it's kind of the Pinot factor from a few years ago. People buy a bottle of Merlot, they never exactly know what they're going to get. Part of the problem is Peter talked about the way we can make sure, really good, consistent Shiraz in this country, and he's dead right. I think, from the point of view of that variety, you don't get the same level of consistency. Sometimes you get a fair degree of greenness in the variety, and I think it's just a kind of, because of that lack of consistency, you potentially have a lack of trust on the part of the consumer.
Yeah, okay. Jim, from your perspective? Last year you described it as ice cold. I don't want to hold you to account for what you said.
Thanks for that. I think long term, it's a difficult sell for a couple of reasons. One, Shane touched on, the consumer's not sure what they're going to get, but with Australia producing Shiraz in particular, and to a lesser extent Cabernet, of such warmth and generosity, Merlot does struggle. Now, at the commercial end, we get out-competed by Chile. Personally, I think Australian Merlot is better than Merlot from Chile, but that's a very personal point of view. But again, the Merlot out of Chile is consistent in their style, and they've delivered a consistent style, which is of a similar ilk to their Cabernet. Come to Australia, and you start scratching your head, well, what does Merlot mean? And I don't think the consumer knows, and I don't think we've communicated that, and perhaps part of it is that we do Shiraz and to a lesser extent Cabernet so well and with such warmth and generosity, which we can't achieve with Merlot, and then therefore it struggles.
Okay, look, thanks. Look, I'm really sorry we've run out of time, and we won't have time for questions unless you want to completely forgo lunch, and I suspect that wouldn't be the case. Look, can you join with me in thanking our panel members, because they've all given up their time. And I think the level of knowledge, expertise and intelligence they bring to this, I certainly find very useful, and I particularly hope that you do also. Just before we break for lunch, I just want to acknowledge our sponsors for lunch, which is Wine Titles Classified, and just quickly ask Nathan Gogol, if you're in the room, to come up and say a few words about Wine Titles.
Thanks, Peter. Obviously, Wine Titles Media, many of you will know I'm actually the editor of the Grape and Winemaker magazine. You can see on the screen all the things that we do at Wine Titles. So you might not have previously connected them together, but they all come out of a really small office just up the road from us here at Broadview. Sonia Logan, the editor of the Wine and Viticulture Journal, is also here in the room. So come and have a chat to us over lunch. I'm not here to give you a hard sell or to plug anything in particular, but want to really recognise the intelligence. It's come up a few times already, that word. The intelligence on the floor here in front of me. Peter's just recognised the intelligence up here as well. It takes, a lot of intelligence from the organisation and from you as growers to get these sort of people here and to talk about whole of industry topics and discussions and to really get the thoughts going all the way back to the vineyards about how this industry is in it all together. So I want to applaud the intelligence on the floor, because tonight, when people crack an affordable bottle of Shiraz, there's people in this room who are responsible for that. When there's people out behind us at a fancy little wine bar experimenting on a small producer or something like splurging on a 389, there's also people in this room who are responsible for that. So I want to congratulate you, head you into lunch on that positive note. So thanks for letting us be a part of today.